discourage the expenditure, टू डिस्करेज लोगों को, ताकि वो ज्यादा लोन ना लेते रहें, इसलिए आरबीआई इंटरेस्ट रेट बढ़ा देता है। और इसी
Okay.
तरह से फिर जब आरबीआई इंटरेस्ट रेट बढ़ाता है तो फिर लोग हाई इंटरेस्ट पे लोन लेना पसंद नहीं करते हैं। और फिर बैंक्स के पास जो पैसा बचता है, जो बढ़ता जाता है, वो बैंक जो है आरबीआई को लेंड करता है, जो आरबीआई अदर बैंक्स में इन्वेस्ट करता है, इंटरनेशनल बैंक्स में, मतलब इंटरनेशनल बैंक्स को लेंड करता है या फिर गोल्ड खरीदता है। हमने ये डिस्कस किया था।
वंडरफुल आयुषी, तुम तो खुद लेक्चर ले सकती हो फिर तो। इतना बढ़िया तुमने एक्सप्लेन कर दिया। एक्सेलेंट।
थैंक यू।
हाँ,
गुड।
बहुत बढ़िया।
वेरी गुड। ओके, सो we will start again from the economic cycle from a different angle, so that we get some more questions and everybody understands this economic cycle, and so that we can then move to sector rotation cycle. And for sector rotation, Ayushi has already downloaded all these fact sheets of indexes, which I hope everyone is going through or gone through, and try to understand it, so that when we come to sector rotation cycle, you are able to understand it. And once we have understood these cycles, then we will find that investing in stock market will become much more interesting and also easier for us. So that is the reason everyone should go through those curves or fact sheets, what Ayushi has already posted in the group. Okay, is my sheet visible to everyone?
No.
Is my sheet?
Not visible. Now it has
My
started.
screen?
Yeah, now it is.
Okay. Fine. So, as we can say, it is cycle. Cycle means it is cyclical. Means it follows a pattern. It follows a pattern every time when we go into economic cycle. Now, what is one important thing to note here is that diagram may show that the time period of all parts of economic cycle is similar or same. Second diagram may show that every part of the economic cycle will be distinctly visible. So here the word of caution is that if it was so easy, everyone would have understood it very clearly. Everyone would have said, we are in so and so part of the economic cycle, and now one cycle has finished, now the second cycle has started. So it would have been a very easy thing for everyone. But it is not the case. You will find every time there will be long debates. Every time somebody will say we are in this, and somebody will say no, we are not in this. One great example is, very easy example is US. We can see for last 1.5 years, so many economists in US are saying US has gone into recession. Somebody says US is definitely going to recession. Somebody says no, US will not go into recession. This debate is going on. And 1.5 years have passed. So what it means is that to determine or to decide that which part of the economic cycle we are requires a big skill set. And even if you have a skill set, even if you have expertise, because we cannot say economists in US do not know economics. it is always subjective. It is always subjective. Mathematical parameters are there, but all mathematical parameters are statistics. They derive the data from somewhere, variety of sources, and then also they give you some data which requires interpretation. So that means it is not 2 plus 2 is equal to 4 kind of mathematics. And the source of data, reliability of data makes a lot of difference apart from the expertise to interpret it. This is the first part. Second part, it is not like a car that when you put the accelerator, it will always increase the speed, or when you put the brakes, it will always go into lesser speed or it will halt. Because economy is not a single parameter driven like car, accelerator, acceleration and brake. Economy is a multiple factor, multiple drivers are there. And net effect of them will finally decide which phase it is there, how long it will stay there, and when the next phase will start. Also, it is not that it is like a gate valve, you open the gate valve when the water will start flowing. So the effect of various phases also comes through various value chains. And some value chains will last, some value chains are quick acting, and some value chains take long time to mature. Therefore, even if you have come to the next phase, it may happen some value chain may still be in the lagging or preceding phases of the economic cycle. So what we are learning here is the gross. What we are only trying to learn here is the step one of just basic understanding that the economic cycles have got certain phases. And these phases are expected to appear one after another because they themselves make a value chain in themselves. They are all interconnected through a value chain of their own self. And because it is a long time period, one economic cycle can last for 3 years. It is not 1 day or 2 day type of economic cycle, or not 1 month, or that 1 year, or it's not like a stock market. It is 30-day contract or 3 months contract or 6 months contract. So it is not like that derivative kind of a market where it is a short period. This is a long period. This is 5 years, 3 years. Sometimes it lasts 7 years. Sometimes one cycle doesn't end and the next cycle starts. Why? Because world is not a static economy. Even a country is not a static economy. There are a lot of dynamic things keep happening. There are a lot of actions and reactions keep happening. Although we are saying we had assumed that we are talking only India is equal to world. But that is not actually the case. India is only a part of a global economy. And in these days, they are all interconnected. They are all interconnected. There is no isolated economy. Even North Korea may say we are isolated, but it is not truly isolated. They are connected. China used to say we are a self-contained economy, but that was not the case. And definitely now it is not a case, it's a global economy. So therefore, the actions and reactions which happens on this long time scale also impact these phases and the performance of these phases. Why I had to give so much of big preface? Because I don't want that after doing these sessions we develop an idea that नहीं अभी तो next phase आ गई है and now so and so indicator has happened and because of the next phase has happened. These are all debatable things. We have to make our own judgments. And I will still say, whether you are economist or not, whether you understand the subject or not, always rely on your judgment. Even if you don't have the skill set, whatever your mind says, believe that. Why? Because we are learning all this for investing. Based on this, you're going to take decision of investing your cash. It is your cash. It is not the cash of economy's cash or government's cash or somebody else's cash. And therefore, the decision also has to be yours. And therefore, even the economic cycle, whatever you feel is the phase, that is the phase. That is the right phase. I want to go even further. Even if you have assessed it wrong, but even with the wrong assessment, you will take the right decision to invest your cash. This is very important point, what I am saying. My belief is, my experience is that as long as it is your own decision, as long as it is your own decision, and even if you are not economist, even if you have not understood these sessions, even if you don't understand to analyze the full chapter of economic cycle, but as long as you take a decision of your own self, unbiased, not what you had read somewhere, what you heard in somewhere media or some politician's speech. No, you have to ignore all that. As long as decision is yours, and then you decide that I am going to invest my cash, that will give you better results or better earnings than if it is guided by some third person, which is not you, including myself, including our group. Decision has to be yours based on your decisions. And if you follow that, if you are consistent with that, second point, you should be consistent with that. So if you maintain that maturity, if you maintain that self-confidence, if you maintain that consistency, and if you are perseverant, then my belief is that you will earn higher returns on your investments. Your return on your net worth will be higher. Then, if you made a hot watch of listening somebody and doing something. And that is the core belief of our group also. And we always encourage that you must follow your own decisions always. Just a minute. I have a call. I will just answer. हाँ शर्माजी मैं आ गया हूँ बट मैं अभी हाँ सेशन में हूँ तो सेशन के बाद कॉल करेंगे हाँ I'll call. Okay, sorry. So I'm stressing you have to follow your own convictions, your own decision making while understanding whether the economic cycle or whether when we will start discussing the sector rotation cycle. Okay, so now let's come back to economic cycle. So we said there are four phases. We have four phases. Let's start with the peak. There is a time when economy will peak. There's a time when economy will peak. When economy will peak, then what will happen? peaking of economy was the sectors are growing. That means sectors are growing. Economy is nothing but the summation of all sectors. So if the economy is growing, your GDP, your growth rates will be higher. Your growth rates will be higher, not absolute number of growth. We always confuse that higher growth is equal to higher level of economy. That is the one basic mistake we do. We should always look at the rates. Is the rate of growing is there or not there? One odd time you may have a fantastic growth, but if it is not followed it up in the future time scales, then that is not is the real picture of a good economy. So we should focus more on the rates than on the absolute numbers. So let's catch it up once again for the members, those who have joined little late. We are talking about economic cycle, and we said it is very important that we make our own decisions instead of guided by anybody else. And even if we make a wrong assessment, but as long as it's investing of your cash, then you will not go wrong on return on net worth. As much as vice versa, if your decision of investing your cash in equity market is guided by the wisdom and recommendations of some party, other party, including myself, including our group, then the risk of you losing your return on net worth will be much higher in the long term. Okay, so let's start with the four phases in the most simplistic term. What is a economic cycle? What we will call one cycle. It has got four phases. Economy peaks, economy goes into recession, then it recovers, then it expands till it reaches the next peak. Again it follows. When it has reached to peak, after some time, it has to again contract, and finally it will reach to a stage when it has reached to recession. After it has reached to recession, it is not that the world will end that day, all economies will doom, people will start predicting doom days are come, but it has never happened, neither it will ever happen. As long as there is technology, as long as they are professionals, as long as they are institutions. If technology is not there, if professionals are not there, if institutions, independent institutions are not there, then maybe doomsday will come for economy. But as long as these three components are there will never be a doomsday, and the recession will start ending someday, and recovery of economy will start. It will take some time to recover. We will discuss each one of the phase, what happens in which phase. And then when the recovery starts, then we find our economy is further grown. If we started with, let's say, 1 trillion or 2 trillion or 3 trillion or 4 trillion of economy, then maybe now we will expand to 4 trillion, 5 trillion, 6 trillion, something like that. But then finally we will peak sometime, because all the factors which it requires to support the expansion may not be as energetic, as powerful, as backed up by other value chains, and they will start getting sluggish after some time, and then we'll find again the cycle will start. So what are we learning finally? What are we learning finally? As long as you have faith, on fundamentals of economy, as long as you trust, then there is no doomsday or there is no opposite of doomsday. Somebody may call it, something यार सब कुछ अच्छा हो गया, दुनिया का सबसे अच्छा दिन आज ही चल रहा है. All those things, as long as you don't believe in either of them, then you will not go wrong. Now let us look at it, that how does it look like? And someday we will try to correlate the both with our equity market cycle also. But as of now, let us not concentrate on equity market cycle. As of now, let us only concentrate first on the economic cycle. Once we understand that, then equity market cycle superimposition, it will be easier to understand after sector rotation cycle. Because some of sector rotation cycle will also lead to us equity market cycles. So let us follow only the yellow part of the curve. Let us follow only the yellow. This curve is we are able to see this other stock market and economic cycle curve.
Yes, yes.
Yes, sir.
Yes. So let us focus on the blue part. Let us focus only on the yellow and green part of it, right? Because blue and green, if you mix it, blue and yellow, if you mix it, it becomes green. That is why some part of the yellow has been shown in the green. So now if you look, and don't focus also on the sectors. Don't try to jump the gun, right? But what is it trying to show is the same thing what we have just seen, that the four phases of economy are linked with sector rotation cycles and then linked with the stock market cycles. It is showing all the phases are equal. It is showing the equal height sinusoidal kind of curve, which is not the case. Each phase of the economic cycle curve may have its own amplitudes and own time periods. Own amplitudes and own time periods. But normally, one phase will always lead to the another phase. Another example. Recently, we had this COVID. But COVID came all of a sudden. We didn't know 1 year back or 2 years back that one day COVID is going to come. So economy was going at its own pace. But since a big event like COVID happened, the economic cycle has to reset. It did not finish the earlier cycle. And suddenly it went into big contraction. Suddenly, from growth, it went to a big contraction and came back to recession phase. That was a forced event which happened all of a sudden, and we were not prepared for that. Same way, we didn't know so and so date Ukraine and Russian war will start, or Israel and this war will start. But many people may say, I knew it, but I don't know if anybody really knew which date, what will happen, how long will happen, what all will happen. We don't believe anybody knows what is tomorrow. We always say never guess tomorrow. So once it is started, then all the value chains started reacting to it. All the value chains started reacting to it. Finally, in the last session, we said there are only two basic things. To make it simpler to understand, there are only two basic things. What are the two very basic things? Cash and price of the product. There are only two things to look at it in the most simplistic way. One is cash, and second is the product, and in product also price of the product. So if you look at the price of the product, and if you look the cash, availability of the cash, which sometimes we also call it liquidity, you look at it individual level, your own level, that means availability of the cash with you, and then what is the availability of the product, and what is the price you have to pay to get that product. Because remember, we had been saying since beginning, cash has got value only if it can exchange with something else. You have cash, but it cannot exchange, then it has no value. When it has no value, it has no implication also in the economy directly at that point of time. We said finally everything will go to the equity market, but it delays the impact on the economy. So you can delay it, but finally one day it will reach. So therefore, the cash and the product, cash is yours, which is being used for transaction or acquiring or owning a product. If too much of cash is available with too many people, too much of cash and too many people, both is important. If too much of cash is available for few people, then is the session on? I'm getting alarm for second session starting.
On. Session is
Is it-
on.
On.
Okay. So it's still in the first session, na?
Yeah, continue.
Yes.
Okay.
Another one.
So what I was saying, that cash available with few people, and so that point is very important. Lot of cash available with few people, some cash available with some people, lot of cash available with lot of people. All these three are three different things in economic cycles. Just elaborate a little bit more. If lot of cash is available with few people, cash is the medium for exchange, that means the cash will be spent on the choices of the product of the few people. So only that part of economy will grow. If some cash is available with some people, then the choices of the product of some people only will have the demand. But if lot of cash is available with lot of people, then the whole economy itself will grow. We are talking about total economy. But it will be very vital to observe that what is the current general condition presently. Cash is not destroyed. If the recession comes, does it mean that cash has been locked in somewhere or destroyed? No. Cash is still available. Only thing, it may be available either with the government or in the chests of the government or the banks of the government or with the rich people of the country. It may be available somewhere.